Incredible move this morning. We took this trade. We're going to recap it. How do we know it? And we're still live in the market. How do we know it's going to hit? We've discussed it in some other trainings. I'm going to give you one setup that the VPAX allows you to capture. This is the Level Beast VPAX. It's the Volume Pressure Absorption Index. Here it is here. The link will be tied to this video somewhere. We measure volume pressure. We don't care only about orders. We care about how they hit the tape, and we measure that, right? And so in our training, we've got a 12-week masterclass. First 4 modules are free. We'll show you that at the end. There's no obligation, no credit card, nothing like that. You can keep the setups that you learn from there, totally up to you. But we show you how we have been able to identify pivot areas. This is our market map. We identify these areas. These levels were released today at 9:05. So you had all of this, right? We're going to show you this one setup. You see this thing down here? This is called the absorption diamond, all right? Now, the absorption diamond is a proprietary trade signal. This is our only indicator, volume-based, with trade signals, right? This is the only one that we offer right now, and it works in harmony with our other indicators. It's a suite of indicators. We have 4 of them. They work in harmony, all right? When you see that diamond fire, it does not fire often. We are on the 15-minute chart. This is our preferred lower time frame view. You can enter on any lower time frame you want, 1 minute, 2 minute, 3 minute, 5 minute. We do not care. It does not matter. But you do not make trading decisions on lower time frame. They are simply for your precision for entries. Your higher time frames, daily, weekly, monthly, 4, 3, 1 hour, 30 minutes, 45. We do not care. Your higher time frame are for structure. The best time frame we have found for day trading, especially if you are going to long hold and scalp, either one, right? Most day traders, they have a setup, an A+ setup, a few of them. If you're good, if you're not, you'll probably have your one-trick pony. You're going to lose. So you need to learn multiple setups. But if you're a good day trader, you're going to have a combined arsenal of long holds and short scalps, right? We're going to flip over to the other chart in a minute to show you what NQ looked like, but we're going to highlight the trade. We're on today. Again, market is live. We are also in this trade right here off of our variant zone. We've already put our ATM in NinjaTrader and in the trading view on the screen. So we're trailing. We have no problem with that, right? So we thought it'd be a nice opportunity because someone asked about the diamond. The diamond does not fire regularly. See that? It doesn't fire all the time. When it does, it's extremely reliable. Here's how it works. When you see the diamond fire, it means something. To us, it means exactly what the indicator suggests. Wall Street, somebody somewhere is building a position. Which way are we going to go? We do not know yet. It doesn't matter which way we're going to go yet. All we have to do is wait for confirmation. But we do know this is where the position is building. Therefore, the first thing we do, where are our market map levels? 2 hours have been spent by a team of about 30 people. We combine, we work together, and then we present a trade plan. There it is there for the day. And we present our key levels, magnets, LIS, zones, etc. All we care about is, all right, where is this thing in relation to a level? And we're going to strike a level there, right? We're going to come over here, and we're simply going to just strike a level. Well, the first thing we're going to do, we got to identify the open and close of the candle, right? Here's the candle. It's tight, right? We're looking at a dragonfly there, right? And so we understand the level is there. That's where the pressure is. So you strike a line, right? Just strike a line there, right? What's the closest level that we've already identified on our chart? It's this magnet level right there, right? So guess what? We come over there, all right? First of all, we're talking about this bad boy right there, right? And second of all, we're talking about this cluster right here. You see that cluster of candles right there? Right there, right? Let's make it even smaller so you can focus. All right, so you see that there, right? Excellent. Then we're saying we're looking at the level, this level right here. It was identified before the market. It is critical that you have a game plan before the market. That's why you're losing. You don't know what you're going to do when you see the move. You cannot be a successful trader and be reactionary. You have to have multiple setups in your bag. You wait for the multiple setups, and your risk is according to the setup. There are A plus, A minus, and A setups. There's B setups, etc. You dictate, do you want to take a C setup? Well, you're going to lose a lot. If you only wait for A setups, then, and you only have one setup, then you're going to take less trades, right? But if you have setups, multiple setups that are A plus setups, multiple setups that are A setups, multiple setups that are A minus setups, you will have a trade everywhere all day across all of your favorite stocks. And all you have to do is decide which one is at the top, all right? This is an A plus setup for us. It is at the very top of what we like to see. The absorption diamond fires in the pre-market. We know a move is coming, right? 90+% of the time, this is going to break. It's not just going to be flat for the whole day. It's going to break somewhere. And we're going to get a multi-bar break on the 15, which is going to equal substantial distance, right? We're at 5.9. You can see the level here. Our market map also identifies the levels, the edges of our zones and levels right here in the price scale. So 7597, right? And we're looking up to potentially hit at the reversal zone. These purple areas and teal areas are equal zones. They're called variance zones. And when we see them, we know 3 rules are in play. For inexperienced trader, they protect you. We tell you, just stay out. Do not enter a trade in this area. Super simple. Why? This is where the market will reverse, stall, or trap. You can look at our videos. You can test out the indicator, whatever you want to do. You can clearly see that's what's happening in these areas. You get a reversal, a stall, or a trap, right? So you stay up. Experienced traders, they're going to take the edges here or here. So if this area says we're going down, you would enter at the apex here or here, either one. And you would assume the risk. In this case, this is a 10-point spread. You would assume that risk if you entered here or 5 points or whatever. But you know the risk. This protects you incredibly because it means that if you were just simply, I'm not telling you to blindly enter, but if you were to simply just enter right here, this level, and there's nothing in between here, this means statistically, right, the probability of us hitting this area is extremely high. There is no reason for us not to go from this level to this zone. That by itself, just understanding level to level trading and what these levels mean, these are not price action level. It doesn't have anything to do with the stock just bouncing off of there or touches. Heavens no, folks. Heavens no. Can a touch, can a bounce confirm? Yeah, for sure. Triple bottom, triple top. But the level has to manifest itself before you're even beginning to trade, right? That gives you the added confidence. So we've got 3 points here. We've got the absorption diamond. We've got the corresponding price action. We've struck a line into the market time, and we have a corresponding level from the market map, right? So this is a great example where the VPAX agrees or the VPAX is working along with the market map. Then a third area of confirmation is you can use your VWAP ATR Advantage Plus, right? Numerically, mathematically, and volume-based here. You can ask yourself, where are we into the open according to the average volume? All right? What we like to see is, do we reclaim the average volume or do we reject? This is the area to trigger the trade right there. Now notice it was triggered, it was mentioned, it was listed on your screen before VWAP even got there. Do you understand? So VWAP isn't leading this. Your decision is leading this. Let's recap again. 4 points of interest. 1, the VPAX absorption diamond. It is a trading signal. Boom, a trade is getting ready to happen. Which way we're going to go? We're waiting on it. We don't know. We need other points to confirm. 2, we mark the open close of that candle. Typically, it will be very tight. We strike it forward. 3, where is our level? Because this is where the action will happen. 4, we're using the ATR Advantage Plus. Where's that anchored VWAP that we like? We've got our own math and smoothing in there, right? There it is. Excellent. So now we've got all of this cluster right here. Logically, We break underneath this and hold. We're going down until we hit a reversal zone. We break above this. We're going up until we hit a reversal zone. Super simple and straightforward. That's how professionals trade. There's not a lot of complexity in the trade. The complexity in the research is before. It's done before they even, you know, the bell opens. Once the bell rings, it's like a foot race. Things happen. Now, in this example, you had a 31-point move, all right? This is a 31-point move from here, this area to here, the reversal, right? Now, I don't know your contract count. I don't know what you're doing, right? But one contract on that, just one contract, we're talking what, 1,500, right? Just one ES contract, 1,500, right? One contract. Now, we're not going to entertain the rest here, but we're just giving you an example here. $50 contract. These are minis, not micros, okay? So, and then the next point, 1, 2, 3, 4, the fourth point that we're looking for is where's our target, right? Now, we got 2 targets along the way. We need targets along the way so that we can manage risk, right? The targets along the way are 1, our LIS. Why? This is the major point for balancing for the day, right? We've identified that. We're looking at so much. It includes orders, sweeps, dark pool orders, you name it, futures components, you name it, options, you name it, and other things in there, right? Corresponding stocks. We're looking at sector rotation. We're looking at seasonality. So many things we're looking at to see, okay, where is Wall Street time? Where do they have to start the day? This is it, period. This is it. And this is why oftentimes we talk about this level in relation to where we open, and we open very close to it. That's a beautiful signal that we're getting ready to have an excellent day, and we're going to really trade really well. After that, your magnet levels. The market is drawn. This is where you're going first, period. This is where you're going second. So you enter your trade here, 9:30. You broke it. Right out the open, you broke it. You could wait for the retracement here. That's fine. But either way, we want to highlight this on the screen. Let's see if we can grab something here. Either way, this is perfect. This right here, that's your entry zone. That is as perfect as possible. That's it. Whether you enter here on this bar or whether you enter here on the retracement, doesn't matter. That's your perfect. Your first target, LIS 1. Your second target, magnet level. Your third and final is the reversal zone, right? You don't want to give anything back. And we love to exit in strength. Well, what if it keeps going? Then you simply trail according to your levels. And let me show you how to do that. So we know we're entering here, right? The first, and we have training on risk management coming, guys. You guys have asked for that. There's a whole master class on that. So you don't have to email support too much, guys. Just know when we're done with releasing the next round and when we're done onboarding the next round, we'll get to you, okay? So here's the entry here. We've already identified. All right, if we're going down, we know what to do. If we're going up, we know what to do, right? We simply have to wait, all right? Once we see the confirmation, we're breaking, we enter, leave it alone. This is a 15-minute chart. What's our rule? We like 3-bar breaks minimum for strong volume. We know we will get 2 bars. Therefore, 2 bars, 1, 2. Your stop, you could do a break even, or you could put it right at the previous low of the candle or the next level, depending on your risk assessment, right? So in this example, this is a 9:30. Your stop could be here, and you would risk about 97, 6 points. 6 points. So let's just think this thing through. This is your overall target, right? This is your overall target. You're going to risk 6 points, right? Just 6 to get 30. So that's $300 you would risk to make $1,500. Does that sound like a good trade to you? Absolutely. The second this thing starts to move and close on the 15 in positive, you just simply move it to the previous low. There, you're good to go. Leave it. There are some times you will get stopped out because the market will be whipping. That's fine. Doesn't mean it's not a good trade. You keep going with that, all right? The next time it breaks, you're looking for multi-bar, but you know you're going to get 2 bars. With our system, we know we're going to get 2 bars. We've mastered the S&P, period. We understand that's a strong statement. Are we saying we don't lose or take losses? No. So stop your hating mind right now. If you're going to just start get negative, nobody wins all the time. We know that. But there are some people in the world who have mastered certain areas of the market, and their profits weekly, monthly, and quarterly suggest that. It says, okay, we're in the green. That's all we care about. Where are we at the end of the month? That's really all you care about. Where are you at the end of the quarter? So in this example, you would simply just trail your stop on the close. We got a 2-bar break. There we are. Now we know the behavior as we come into the LIS. What's going to happen? This is where the market has to balance. Doesn't it make sense then that we trade orders here? Buy, sell, draw down, sell, buy, sell, right? Until we break. So we are prepared to get into our trade and leave it alone until 10:30, because we understand that after one of these guys are going to win, we're either going to make a little bit of money getting in at 9:30, pulling your stop. If you want to pull it up to the previous low is here or here, you are stopped out, you made a little bit. Or you're going to protect yourself, break even there, or you're going to continue to risk the $300 in order to make a lot, right? So after you see your bar break, right, we got the open here, 1, 2, 3. You could definitely exit into strength here, or you could just simply wait. Now, what could you do to read the volume? Well, you see we've got 2 VWAPs there. We have some smoothing and logic. These are not normal VWAPs. We want to say that, right? We have an ATR in there, and so we know that if the market is still holding above both of these, look at that. That is a strong indication. In harmony with our volume profile, our volume VPAX down here, we already know. Now we're good to go. Now we're going to share something with you here, that one little thing. We know we've thrown a lot at you, but this is just a series of check marks. That's all it is. 1, 2, 3, 4, 5, 6. That's all you're doing. That's all you're doing, right? You've entered your trade. You were already prepared by 7 o'clock, right? But let's just take a look at this real quick, guys. We'll wrap this up in 5 minutes, all right? Let's take a look at this. Now, look at this line here. This is not an EMA. This is what we call a delta EMA, because we're measuring something. We do not care just about shares, orders, or just contracts. We need to measure it against something. So we've got some smoothing and logic in this VPAX. That's one of the reasons why we can set a trading signal. Look how it's above what we call the 0 line. This is the 0. It's an invisible line. You can see some bars are above it, some bars are beneath it. Even when there's a red bar that prints, you can see it never dives aggressively past the 0 line. This is an indication that the sentiment, the actual order count, hasn't really changed the metrics that would move the market. Therefore, this trade is still on. Next bar, very bright color. Look at the colors of these bars as opposed to the colors of these bars. All of these tell you institutions are engaged. And institutions stop being engaged around 11:30. But by that time, your trade, my friend, is done. Even though the sentiment of the day is still bullish. Now, we're not saying you couldn't have taken these trades, but we don't want to sit through this because this eats into your profits, right? So let's recap and then close this short, brief training out. On the VPAX, there's something called the absorption diamond. It doesn't fire often. It doesn't even fire every day. But when it does, we've got gold. What do we do? Well, first thing we don't do is just think it's a blind signal room that someone with no brain set on an alert, and then you're mad all the time. You actually have to have a brain to trade, all right? That's one of our models, okay? So don't come at us, thinking that we're here to make you money or something like that. We have a lot of people who do make money, and then some who don't, who can't get and understand or be patient. And we want to help you through that. And the best way is straight logic and reason. This tells us something's being absorbed here and a position is being built. We strike a line forward. We compare it with our levels that we've released, that we've done hours of work on, and they're before the market. Then we look for the break of that area, lower or higher, period. You could have taken this trade before, that's fine. You would have taken it to this target here, no problem. You would have made money. You could have waited to the open. As we open immediately here, and we break. You would have gone in there. Your stop would be right at the previous low. 6 points here. And then as you close, we're on the 15-minute, you take it to your first target. After your first target, you decide, do I want to move my stop up to the previous low? Or do I want to close my trade up here on the close of the candle? That's up to you. Assuming you hold it at the previous low and you leave it alone, as long as you don't break here and you wait for that volume to kick in, you're going to take it to your next target. What's the next target? Number 2 is number 3 is going to be your variance zone. Your magnet level, ultimately your variance zone. That's the trade. So again, I think we've done some other videos about this. This trade for one contract, we were in more than one, but for one contract, this is what it printed. This is not a get rich quick. This is not a, profits to entice. This is real trading, real profits, real risk management. And you can take whatever contract count that you want. Now let's take a look at NQ and wrap it up. Here we are on NQ. As you can see, the VPAX is loaded at the bottom. There is no absorption diamond on NQ. This means that nothing specific to what we like to see order-wise, volume-wise, what's happening over here. But it doesn't mean that it won't translate to behavior over here, as tech would be a leader in the market. Therefore, if we know it fires at 7:30, what are we looking for? Again, our levels in relation to the candle, to the area where it fired. Boom. Immediately, we have a beautiful, very visible, very observable, very observable variance zone, right? There it is right there. What does the till variance zone tell us? It tells us immediately, buyers are sitting here. They're going to engage. This is where the market will reverse, stall, or trap. If we're going down, this is where, again, it was released by 9:05 today. This is incredible. So now we look at how we're opening, and we've combined the logic that we already have from ES. We already have a trade over there. But let's say you trade in Q. You would use the logic from ES because it is a dominant player, right? It is the most liquid of the futures. It's got the volume. And in Q, you would look at that as being tech-driven. Therefore, when you see the move fire on ES, right? What candle was that? It was the 7:30 candle. So we're going to strike a line here as well. And we're just watching. We're watching this. And then automatically we see, we're gonna open in a variance zone. We're coming into this area, right? So first 15, we see that buy up. What did we talk about regarding those points of interest, and how can we use that with NQ? Man, this is incredible. We see at 9:30 a negative dive of our delta EMA into sell zone, into sellers. So that's a heavy order, right? Once it hits an exhaustion band, we have to wait because we know that the order count is exhausted for that 15 minutes. It's not going beyond that just yet, but we got to wait to see if it's continuing. However, on the next bar, we see it reclaim the zero line. Do you see that there? It reclaims the zero line, and we begin to print green. And we want to add, we are also in a variance zone. And we want to add, we're above a magnet level. And we want to add, we're above both VWAPs with our special math and smoothing in there. I have to mark those on the screen so that you can see them. All right, you got to see all that, right? So we're here. There's one there, right? Let's go and bring it here. There's another one. So we're above it, right? There's a level there. You're logically, you're just checking boxes. You're saying, okay, we're holding above there. The next one, wow, we're reclaiming both of those. And then the most important, wow, we are in a variance zone, which tells me we're going to reverse stall or trap to the upside. But wait, we begin to then reclaim or claim that level that kind of coincides with ES. That, my friend, is a clear entry. Where are your targets? As we stated, number 1, LIS. Number 2, LIS2. Number 3, here you are, right? And you can see if you look really closely, within about a cent or penny or two, we really hit it in how many bars? We can't make this stuff up, folks. How many bars does it take us to hit it? Right there. See that? Right there. 1, 2. See that? So before you even see this drawdown, which you know is very aggressive on NQ, if you don't get this the right way and you enter here, you're destroying your account. You know it. For you funded traders, you're blowing it. But if you enter down here, anywhere in here, you're good. You're good. And you have to have the right risk. Keep in mind, contra account, but you're good, right? So let's do a little bit of math here then. Now, we took the trade in this area at 35.07. So we're about here, 35.07, right about there, right? And that is because you're like, well, you got in before here. Yes, our rules state we enter into this area at the edge. We already talked about that, right? We say, okay, we know that there's buyers here before VWAP caught up to this, before anything caught up to it. We understand what we're going to reverse. So our risk is great. Look at that. If you enter here, what's your risk? You're going to risk what? Just a few points here? We like that all day. All right. You take that, then you begin to break. We're on the 15. We're going to let it close. We know we're going to print two bars in our system before we see something else. Therefore, when we have acceptable volume, we want to add that. Therefore, we're good to go. So that's about 140 points. 140 points by, what time is that? 10 o'clock, okay? Now, if you're trading minis, then you're looking at about 280, right? So 140 points, and you're looking at about $280, right? Now, if you have just 10 contracts, in 30 minutes, you're doing 28. You get the point there, 2000. You get the point there, and you're out. See that? Let me move this back so you can see that it just hits it there, right? Just hits it there. Now, let's talk about risk management, something nobody talks about. What's our rule? Levels and lows. Remember that, all right? So we'll put it here. That's beautiful assessment. Levels and lows. That's how you manage risk. Levels and lows. Obviously, the first part, we're going to be very clear here, guys, in this training. The first part is contract count. Or we'll say size. All right, we'll just keep it as size. That's the first part. So you need to make sure your contract count has enough there that you can stomach the drawdown, the retracement, the stall, whatever that is, whatever you're trading, it does not matter. Options or futures, crypto, it does not matter. All right. Size, number one. How much size? All right. Number two, levels and lows. So, all right, we got in here. What's the previous low? This is pretty deep. That's too much. That's too much. So you're going to have to select one of the previous lows that you like. In this case, it would simply just be this one here for us, right? And isn't it interesting? It coincides exactly with VWAP. Now, what you could also do is you could use it in relation to your level, the edge here. This could be it there, right? Right? Depending on your risk appetite. But isn't it interesting that all of them are tied and close to the low, this level here with our variance zone? As you break, what's your next one, right? Well, that's got to break up there. You can leave it here or you can start bringing it up in relation to your levels right there. Now, here's a secret. We do not like to be in relation to the direction of the stop. We do not like to move our stops until the candle closes, and we do not move them above the level in relation to the direction. So if we're moving up, the stop is beneath the level. It's not up here, it's here. Why? We give a little room for drawdown, but we know we're going to hold there, and that's it. If we're going down, then the stop would be above here so that this thing could come up a little bit and stay in the area, and that's it, right? No one perfectly knows the exact scent of where it will retrace, but what we have been able to do is identify really to the dollar or two when it comes to ES and SPX. When it comes to NASDAQ, we're within a couple of bucks, all right? You can see here that we're just sitting at the top here, right? It's not exact, right? See there? See, it's at 90. And this thing kind of comes up to what? 701. So 10 points? You and I both know on NASDAQ, that's nothing. That's like a point somewhere else, right? Not even, right? Because it just whips so hard. So, nobody is going to be able to tell you to the penny. That would be a lie. But what we can do, we can get it pretty close to about $1 or a few bucks, depending on the stock, to where we're going to reverse stall the trap. And we've been pretty accurate with that. And so this is the system that we live and die by. Now, this is turned into a 30-minute training. We didn't mean for it to be that way. But if you like this and you want more of this, quite frankly, for free, let me show you what to do. We'll put the links down below. The first thing you're going to do is go to levelbeast.com, indicators, Level Beast Pro. This is the primary indicator, right? We update it every day. We release it. It is for TradingView, right? So you have to be able to get indicators on your trade. We've been told you can get it on pretty much any plan. So it's fine. You have to, follow the rules and directions there, right? This is going to get you the trade plan. This is going to get you the levels. After that, you're going to want to get our ATR advantage. You can find that here as well. Just go to the site, scroll down, you'll find it. In addition to that, you want to get the VPAX, right? The VPAX is the volume pressure. That's what we just talked about. It's the one with the trading signal. You can see the diamond there. Get that. Go down to the bottom of the page if you like, and then you'll be able to come to our, masterclass. You can find, we'll put the link attached to this. The masterclass, you sign up for it, no credit cards required. The first 4 modules, we've got some bonuses in there. They're free. You can keep the setups. It's up to you. If you want to go deeper, if you so choose to and you want to, then what we'll do is we'll include the indicators in an annual subscription. You got it for the whole year. You have likely about 18 or more modules that you'll be getting, training, setups just like we gave you in order to crush this thing every day. We've got risk training coming as well. We have other setups that's coming as well for you. And we're just having a ball with this. So, you guys asked us to kind of break this down, what we saw, how we knew it was going to run up there. And that was it. So it was a pleasure, guys. Check us out. Look at the links attached to this video. And as always, happy trading.